Most people are thinking that they need perfect credit to buy a home FHA, and that's really not the case.
We're going to have some good conversations today. We're going to attempt to make this not as dry as toast because talking about loans sometimes can be a little overwhelming or it goes right over your head. If you don't know about an FHA loan, we want to try and explain at least the basics and what to expect. What is an FHA loan?
An FHA loan is basically a loan that's insured by the federal government. It's FHA literally stands for the Federal Housing Administration. What they do is provide more homeownership opportunities for more people across the country by using a simple method of insuring loans.
There's a little bit more flexibility in what they require.
There's absolutely more flexibility, lower credit scores, so most people think that they can't get into a home loan without a 620 credit score. That's not the case. We can, generally accepted terms for FHA loans start at about a 580 credit score.
Yeah, 580.
Which is, very lenient. I mean, very broader underwriting guidelines that allow for explanations of, maybe some things that have happened in a borrower's life that
Talking about credit, like
on their
different
credit report, or they had something that they got into a dispute with their cell phone provider, and it somehow ended up in collections, and most of those things can be overcome. It's not FHA is not specifically in the box and just locked in there. We have some ways that we can work around that. FHA allows for higher debt-to-income ratios.
Okay, let's talk a little bit about debt-to-income.
Debt-to-income ratio, simply put, is if you make $4,000 a month, and we're talking about gross before taxes, and you've got amongst all your bills and your housing payment $2,000 going out, you do the simple math, your debt-to-income ratio is 50%.
Right.
So now that gets broken down by a front-end debt ratio, which is solely your housing payment, versus your back-end debt ratio, which is your housing payment plus all of your other debts. Could be, department store charge card, credit cards, your car payment, furniture, toys, any of those things.
What shows up on credit?
What shows up
on credit is the key component here. It's not necessarily your stuff that we like your cable bill or your electric. We're not factoring that in for your debt to income.
No streaming service, no cell phone payments.
Right. So in case you haven't met us before, we are Mohave Mortgage, and we are right here in Lake Havasu City, and we decided to do these videos right here at Rotary Park. We are right next to Bocce Ball. We got Bocce Ball going on. We're right here at Thompson Bay, right? We live here full-time. We work here full-time, and we chose Lake Havasu City. We chose Mohave County. We chose Arizona. We absolutely love it here. We really do specialize in pretty much I'm going to go with saying almost any type of property in this county, we can help get you financed.
Absolutely. That is without a doubt.
Yeah. A big delineator with FHA is the down payment is much lower.
It's a huge benefit. I bought my first home with an FHA loan.
Yay.
I pulled from my 401k.
Really?
And I will back up to say that, most people that get into their first time as a buyer are very, very nervous. And that's where we like to use our years of experience to walk you through the process to make this not so foreign, so that you're not constantly nervous about what you're getting into. So
I cried. I cried like a baby when I first signed all those loan docs.
Sure.
I mean, it's intimidating.
Sure. Yeah.
It's intimidating. I mean, you are making, but it feels so good when you get the keys and you get to move in and you get to paint it whatever color you want, and you get to you get to raise your family, or it is like you said, it's the path to home ownership. It's the American dream.
It is amazing. And so just for a simple example, $300,000 home at 3.5% down payment, which is the minimum requirement for an FHA loan, it's about $10,000, and you've got some closing costs on top of that. Now, the good thing about $10,000 is, as I mentioned, it can come from your 401k. A lot of employers will put that down payment up for you without expectation of repayment. You can get that in a form of a gift from a parent, a sibling, just about anybody you have a close familial relationship with. Closing costs, we can also overcome that to minimize the effects of cash out of pocket. We can ask the seller to pay for those closing costs. And, with the right offer, there are very few sellers that are adverse to helping a young couple or a young first-time buyer out.
So a little bit about Arizona specifics with FHA. There are some loan limits, right?
And that's not just Arizona, of course. Okay. There are countywide loan limits. So you have different counties in Arizona as you do anywhere else, and our loan limits are based on what FHA has defined as a reasonable cost for a home, and so they'll insure up to a certain home loan amount. Currently, about $541,000, which really buys you a lot of house, and
It does.
that's actually more than most first-time home buyers or
Yeah.
people that are inclined to use FHA financing are
Mm-hmm.
looking for, because we want to baby step into this.
Sure.
Your first home is never going to be your final home.
No.
So we take things one step at a time, and that brings us kind of to the process of what to expect in the home buying process, and it's written into your contract. Time is of the essence.
Mm-hmm.
We ask that you stay very diligent to the process.
Yes.
And when you're asked for something, it means that we need to get that in as soon as possible.
Mm-hmm.
Underwriters are asking for information, and they're asking for this information for your benefit
Mm-hmm.
to get that loan through.
Right.
They can't do their job without us helping them help us. So
Right.
we want to do everything we can. Stop what we're doing. Time is of the essence. Get that paperwork in.
Right.
We got to do it. Now,
Yeah.
there's going to be cases from time to time where things just don't go as smoothly as you hope to.
Right.
Something pops up. We all have skeletons in our closet.
Sometimes.
Underwriters are human beings.
But they'll find it.
And they can have a bad day too. So I'm not going to say that you're never going to encounter that, because it happens. But it's, everybody's working together for the same goal
Yes.
here. And it's important to understand that a short temper isn't going to get anything accomplished. We're all working together
Right.
on this. So
We are going to be your new best friend for 30 to 60 days, though.
Abs-
With the FHA loan average, 30 to 60 days closing, and we are going to be your new best friend. Processing or sales loan officers, we will be in communication with you all the time, either email or phone, progress, right? And if you do need documents, I think we all need to accept that you might need to send in an additional documentation. It's a part of the process. If 60 days down the road, you might have to add more bank statements. You might have to get that pay stub updated. Reserves. I think it's part of the deal. And that's just it.
we typically like to shoot for a 30-day close on just about everything, but there are going to be cases where that process goes a little bit longer. So
Little surprises.
again,
Little something.
yeah, and that's we're trying to put together the steps as logically as possible and as expeditiously as possible, but there are a lot more people that are involved in that process, and everybody has to do their job to make this work for the buyer.
So what types of homes can you buy with FHA?
All right, with the availability of government-insured money to make homeownership possible for more people, we're focused on primary residences, someplace that you're going to live, someplace that you're not going to be walking away from. Now, that doesn't mean that it needs to be a stick-built home. It can be a
Stick-built single-family residence.
Single-family
SFR,
residence.
single-family residence.
Correct.
Okay.
It could be a manufactured home, modular home, as long as it's where you're hanging your hat, your primary residence. Now, it can also be a duplex, as long as one of those units is occupied by you, the buyer.
Or up to a fourplex.
Or even a fourplex, for sure.
Or condos, depending on if it's an approved condo complex.
Yes, it would have to be approved by FHA.
By FHA.
To be eligible for FHA financing.
And another component that is part of FHA is called MIP. And MIP stands for?
Mortgage Insurance Premium.
And what is that, Rick?
Not to be confused with private mortgage insurance. So, MIP is basically a premium that you pay up front. It's like down payment on an insurance policy. Everybody pays into this large pool, and that's how FHA is able to insure so many loans for so many people. Now, on top of that MIP, you have an upfront mortgage insurance premium, which is usually financed into your loan. You do have the option of paying that in cash, and that's based on a percentage of your total loan amount. Normally, it's rolled right into the loan amount, so it's something that it's so small that you don't even really notice that much of an impact on your monthly mortgage payment. But then FHA also has the monthly mortgage insurance, or MIP, that you'll be paying as part of your monthly loan payment for as long as you have that FHA loan in most cases.
Right. And that is part of the lower down payment component. It's insuring FHA. It's giving them that extra.
It's how they are able to have that flexibility
Right.
to make more loans. So, and the concept is simple, that nobody wants to ever miss a mortgage payment. That's what we're trying to do is make the American dream within reach for everybody. but things happen. Life happens, and somebody may lose a job or have some sort of a medical incident that comes up, and it causes them to default on their loan. Well, that mortgage insurance is sitting over
Right.
here to pay back the lender that put the money out for that
Right.
buyer or that borrower,
Right.
so that nobody gets harmed.
Right. And FHA, with the mortgage insurance premium and with FHA loans, it's not a forever thing. You know, as you progress with your loan, as you make your payments, you know, down the road, we can refinance you. You may or may not have to pay that insurance premium forever. You could down the road get refinanced into something else. Yes?
Yes, for sure. Real estate always appreciates. The value is always going up and up and up and up. So what the lenders are looking for as a measure of security is a margin of equity, usually about 20%. So let's say that your home is worth $100,000 and you only owe $80,000 on it. You have that $20,000 cushion there in the event that something should happen to happen. When you have that 20% equity cushion, then there is no more need for mortgage insurance. It's, the mortgage insurance is in the equity in the property.
Got it.
And so we can refinance that to a new loan, eliminate the mortgage insurance. And the mortgage insurance, depending on the original terms of the loan, could be $50 a month to $500 a month. Every loan is different.
Right.
So we look at that on case by case. We're really going to dig into provide the best scenario possible in all cases.
We've given you an idea of the product itself, and now we're going to talk a little bit about like what type of documents and how to actually what the process and what type of documentation shall our clients expect.
And that's a great way to prepare because, as we mentioned before, this could be a very nervous time. So getting your head in the right place is key, and know that you're working with professionals. Your realtor, your home loan specialist. We're going to keep everything calm and moving forward.
Nice
so
and smooth.
You'll need to prepare. We want to see stability on a job, usually 2 years in the same, not necessarily with the same company, but at least in the same field, and most people will progress in that
Sure.
job. We want to see stability in residence, usually a couple of years in the same house with a rental payment history that we can rely on, that we can document, goes a long, long way. We want to see some, responsible use of credit. And again, somebody that's got a 580 credit score may have had, a blemish or two on their credit report.
Something happened, but it's not forever.
Exactly. Life happens. So, there's even if you have one blemish on your credit report, there's also other
Ways to make up.
Trade lines that you've got on there that are positive.
Right.
So, and we'll lean heavily on those rather than just focusing in on one little incident. Consistency and stability are key in any underwriting scenario. You're going to want to have a couple of years W-2s for, if you're a wage earner, your most recent pay stubs, a couple months bank statements. It's important that as you understand the process, and again, we're going to kind of give you a heads up beforehand to let you know what the do's and don'ts are. You don't want to be moving money around. You don't want to be depositing a bunch of cash.
Right.
Life should carry on as normal.
Yes.
Your situation becomes an open book, and there's certain things that underwriters are trained to pick up on,
Yes.
so that they know what to ask for
Yes.
to make sure that they can make a quality loan.
This is not the time to buy the car. This is not the time to quit your job thinking that we're not going to find out about it, because it's just like I said, like open book was a perfect example. Keep it smooth. Just keep going the exact route that you're going. No sudden movements. Keep everything nice and smooth for the 30 to 60 days that you're going to be with us. And once you get the keys, then, have at it.
Great points, and that's what underwriting is looking for too. So we can't overstate that enough. Most of us are available probably 10 to 12 hours a day, and,
Yes.
and I know myself personally, 7 days a week. This is what I live. This is what I do. And you mentioned it before. Lake Havasu is where we live, work, and play. Everything we do is for this community and for the people that we can help move into a new home.
Okay, that couldn't have been a better ending. So if you've got any additional questions that you'd like to ask us, drop them in the comments. And don't forget to like and subscribe the Mohave Mortgage channel on YouTube. And we are also on Facebook. We got Instagram going on. And we've got a really robust website to show you all kinds of details about all the different products that we offer. So
it's important that you feel comfortable reaching out and calling us. That's what we're here for. This is what most of us have been doing for a good part of our lives. And knowledge isn't anything if you can't share it with somebody to have maybe a little bit of impact on their life. And this is one of the things that's so rewarding and why I focus on mortgage finances, because I get an opportunity every single day to have an impact on somebody's life.
Oh, I love that. Thanks, Rick.
My pleasure, Don.
And scene. What is that? Is that an airplane?
Almost sounds like an airboat.
I think I saw one of those. I saw an airboat out here. Oh yeah, there we go. There's some speed. Can you hear that?
It's loud.